Ira Epstein with your financial market wrap-up, and this wrap-up is for a pretty wild trading day on Tuesday, the 11th of January, 2022, and we're getting on just past 6:10. So an interesting day. We saw Fed Chair Powell testify before the Senate Banking Committee. It was also part question about the economy, part about his next tenure, because I think it's a slam dunk. He'll be our next Fed chair. What he said of interest to me was the pandemic, basically, they have no experience in dealing with one. Certainly he didn't. I haven't in my lifetime either. And the Fed got it wrong. Inflation got away from them. Okay. But he also said something very clear. Yes, the members are voting for as much as the last vote, 3 rate hikes this year. But, keyword but, it's going to be data dependent, which means they can vote any way they want. If he doesn't think it's data dependent, he is the vote. Everything else is just a whisper in his ear from them. More than a whisper, sometimes a shout does not mean he has to listen. So he's just telling you he is staying data dependent. When asked about the balance sheet runoff, he's not doing anything with that. He said that too. We'll wait and see, okay? So that was the part that kicked the stock market up. The fact that the balance sheet isn't coming at you like a ton of bricks, the fact that he's going to be data dependent with it. Very important, I think. Now, in Europe, you've got the Spanish Prime Minister joining the Health Secretary in the UK, trying to get the European Union to now get ready to transition from the word pandemic to endemic. They want to start treating COVID like the flu. I think this is big time. I told you it's going to happen in the United States. Europe has been ahead of us on getting the problems, trying to figure out what to do with them. Then it comes here, and I'm not saying our medicine isn't as good as anything in the world. That's not what I'm saying. But I see this as the event that's going to happen. A 4th shot is getting ready. Moderna's preparing it already. So you're going to be getting this. And yes, if the fallout is the way from people that are vaccinated, that's the key. People that are vaccinated, and you're seeing this rise in contagion, not the amount of deaths we've had before, and it's more like the flu or a bad cold than anything else, you're going to an endemic from the definition of it. Gold up a little bit today, the dollar down. Remember, we've been hearing from everybody, that dollar's going to go up because interest rates are going up. No, it hasn't. When we go to the S&P, you're keeping the bias of the market up, and even on a big correction, you haven't pulled back to the 18-week average of closes the way you did back here in the October time frame or the way you did last October, November. You just haven't done it. So the bias of the market is up. I am more than aware that JP Morgan came out today, their head analyst for fixed income security. He's predicting a 15% possible, maybe more, drop in the stock market, and he's telling people to move into bonds and notes. Now, when you do that, you do realize you're going to get a negative return right off the bat. You're going to get 2% return on what you buy, maybe, if you're lucky, and you're going to be looking at tomorrow's the inflation number at 7.30. If you get a 7 handle, which means 0.7%, and you multiply that times 12 months, what do you got? You're way behind. I don't know. I'm not in that camp. I am in the camp you can get a correction in stocks that could be rather steep. I am not in the camp that you don't want to own the good stocks. So when I look at this market also, we knew we had a distribution top. We discussed it here. You had the break. Now the question is it run its course? That's really what traders are looking at. This chart doesn't answer that. You have a higher high, a lower low. When you look at the chart, you got down, and I want to get away from today. You were coming down. So if you rally back up, what's my line in the sand? For those of you that watch all the time, I call the neutral number on a chart the 18-day average of closes in red. You can see the labels I've got. So where does it go back to? Well, for the past almost 5 days, you've hit it 4 days in a row. Market is waiting, and at 7:30, we're going to get another number. I'm telling you, that inflation number is going to be something everybody gears on. You're hanging at that 18-day average right now. You've gone from the upper Bollinger Band to the bottom. Bollinger Bands combined with moving averages and momentum. You've got to learn how to use them. They're so important. I'll talk about that with a different ad you haven't seen in a while, and I'll be in it live, walking you through that at the end of this. When you come and you take a look at momentum, the momentum's gone flat. So no trend, traveled from the high point to the low point, went back to neutral, waiting for tomorrow's report. When you come to the NASDAQ, this has been in a downtrend. Right through here. Let me just show it to you. Lower highs, you close under the 18-day average, momentum down, not oversold, targeting, as far as I'm concerned, the combination of the 100-day average and the lower Bollinger Band. See the black line and the green? You hit that, and I contend and teach. That is where I think the pros are coming out of the market. It's not about catching the low. You want to be in that zone, and it's saying maybe it's time to run, baby, run. But now that the market got down and oversold and it's corrected it, the guys with the gun, they're loading it, they're pulling back the trigger, and they're saying, maybe I'll pull it up there. Let's see what tomorrow offers me. Maybe it's the short side again. The Dow has been the strongest of the indices. It was unable to make a travel trip. Couldn't get the booking to the 100-day average of the lower band, and it's sort of just stuck here. It's not in a trend. You got a higher high, lower low. It's all sideways action, and the Russell failed miserably at this challenge of the 200 and the 100-day average, and it's really caught between the upper Bollinger Band and the lower band. That's the way to look at it. I think the VIX people are applauding what I was saying. When the market was coming up the other day, right here, as it was up there in my morning subscriber videos, I was saying that I think the longs are going to bail at the upper Bollinger Band, again, that course. And one of the things I've noticed is that they like to write puts. Like to write calls as the market gets up to the upper Bollinger Band, the calls. Now, calls get under a lot more pressure than the puts because the market has what I'm going to call a natural bottom now in that 14 area, 15 area on the downside. You don't even hit it very often, and when you do, you return back to that 18-day average. When you hit this, my goal is to get back to that average. Bingo, you did it today. So I think the pros are now neutral this market. I think the trend is up unless you take out 1857. Why gamble on it going into the CPI data? Did you take it out today? So let's take a look. 1870 right here. The low of this day is 1857, right? We come up, we hit the number, we fall back today. 1820 is the low. So you've already taken that out. You're really not in a trend anymore, which is right where it belongs going into tomorrow's report. In the 30-year bond, you stayed under this 5 days in a row, and now you've moved to the right. Have you lost the embedded reading? No. I think the pros are selling this market. They could be under pressure in front of the CPI data because who knows what that's going to do, but I don't think they've abandoned their bearishness. They will, in my opinion, if the red line, which is closed at 1665, closes with a reading over 21 tomorrow. In the 10-year notes, the same thing. I think the pros are trying to sell this market on the rally. Now, it takes guts to sell into it in front of that CPI number. I know I was telling my clients to be doing that. Tonight, I'd probably go to the sideline without that rec. The reason is, why take on the risk that I don't have to? I'm not about standing in front of on a railroad track like this and go, come on, the bullet train's coming, and I know I can do this, and I know I can do that. I own a brokerage firm. I have clients galore that do that, and they inevitably get hit. They don't understand. They want the thrill that they got it right and that market goes. Unfortunately, the market never... It's full of tricks. If you're a trader, you know what I'm saying. You get the head fakes. It's like a basketball court that goes that way and then it comes this way. Well, as it goes that way, it knocks you out and then it makes that move. I don't want to be in that game. I don't want to be there at all. I want to be the sideline guy that goes, I think I can join now. Dollar index. This is where I think the pros are covering shorts. Right here, right now. Oversold down to the lower Bollinger Band zone. Bye-bye. Let's see the report tomorrow on the CPI. flip-flop on the euro. I had told clients on the long side, I don't mind saying that. And today, one of the trades got stopped out at break even. Another one did fine. Not big winners. Folks, I want to be honest with you. I lose. With my recommendations have a lot of losers. It's the trying to keep them this, getting the winners to be bigger. Everybody that's a trader and putting out market analysis has to admit that. I don't publish track records because I'm not managing your money. I don't care about that. I care about giving you the setups each and every time, and that's what I'm about. I want to be your guy that you go to in the morning in my subscriber video. Oh, look what he's saying. Here's why he's saying it. You take it the rest of the way. That's all that I'm trying to do. No more than that. I don't need the headline news. Higher lows, higher highs, but you're stuck. Come on. Is that not sideways action? I don't know which way it's going to break out from there. British pound is bullish as can be still. And you're going to go, why is he saying that? You're embedded. You keep going higher. Now that you're over the 100-day average like that, you would expect without a jolt of some piece of news that normal corrections find support there, but something else is happening. All of a sudden, we have the 18-day average marching towards that number. Is it going to cross it and give you another good part to it? I don't know. Bitcoin, well, how many days did we have under the Bollinger Band? If you look at this day here, you closed at $42,040. You closed over the Bollinger Band. This day you were under it. This day you're under it too. And this day you were under it. So you had 3 days under, and you're moving to the right-hand side. You stay 95% of the time within the band, not outside of it. If you lose the embedded reading with the reading over 21, I contend the pros will come out of this market and say, I wish you all the best. Maybe that was it. The correction has run its course. The differential between Brent and WTI crude, and I have the right contracts up here. Look at how this thing has crashed in. So suddenly our WTI is caught up with this, and that means the lower it goes, the more strength you're getting in the WTI. Generally, the Brent has got a bigger value, so that's what you're looking for. When you come to the Brent, you're embedded. You hit your Bollinger Band. I think the pros were out of it there, buying again on these breaks. They're waiting to buy again. I don't see why they're not. When the red line closes under 79, the game's over. But when it embeds, you're looking for these breaks. That's what I think the pros are, to buy the market. And I cover that in detail in the mornings for you as well in my videos. Same in the WTI. But here's the picture. If you're over the 18-day average, you got an embedded. I know for me, I'm on the right side of the market. It's going up. It's doing what I thought. It's keeping me from being short because I have a rule. I am not going to be short when the price is over the 18-day average. I'm only telling my clients, when I say what I'm telling my clients is I want them to be looking at long scenarios. Will they eventually, when a trend ends, they're going to give back something? Of course they are. That's part of what trading's about. In the heating oil, take a look at how long you've been embedded. Are you even thinking the way I just explained it to be short in the market? Not in your wildest dream. Nat gas, we've been talking. You're caught in a sideways band. You try to break out here. I needed the market for a real breakout to close at the top part of that day's range and over the Bollinger Band. It did not do it. The market is trying to work its way higher in that, but it's overbought and it has not given a breakout scenario. Now, you know we've got monstrous cold on the East Coast. I'm in Chicago. Today's the first day we're back in the 30s. We woke up this morning in the single digits. Now we're back in the 30s for a while. That'll travel out east. That'll create a little bit of pressure there, and we'll see what the build is on Thursday when we see the EIA number. Now, you hear me talking about this Bollinger Band. It's made up of 3 parts. My course is devoted to that, but it's all new. And it's about using a moving average, using a Bollinger Band, and the slow stochastic together. Very specific. I don't care what you know about what you think a chart is or anything else. This is an enhancement. This is your master's, your doctorate degree in understanding, from my perspective, what this is. 13 videos make up the course. You're going to get a free 14-day trial to my full research. You want to know why? Give you 2 weeks while you're taking the course so that you're seeing live, the word live. You see in the morning as I'm recording the current video. They're put out within 20 minutes of me recording them. What I'm seeing at that moment in time. Now you're taking the course, you're seeing what it is, and you're saying, well, look this is what he's saying. It's right in front of me. We're going to throw in the charting software that I use for you. It has values that are a little different in stochastics than you're used to. When you're a subscriber to my research, I'm willing to share with you what I did to modify those values. I think they're important to understand. And when you put it all together, the charting software, just so you know, at minimum $60 a month we charge. Then you're looking for the trial to my morning subscriber videos. Typically a $15 a month value, $75. The whole course is $90. I think you're getting a good value on it if you take a look at what it does, and I think you'll walk away with a complete understanding. I want to use that very clearly, a complete understanding of how I think you should be approaching Bollinger Bands. Can you change it? Of course you can do it. How do you find out more? Just go to our website. Under the word education, it's right there. Might be the best $90 you spent in a long time. I use it when I'm putting out my ETFs, my spider recs, my stock recs, and the videos, and of course the futures. I'm Ira Epstein. You have a good day.